What's going on, guys? My name is Steven, and in this video we're going to discuss the relationship between the increased price in gold recently and inflation. So if you guys aren't aware, the price of gold and silver have been increasing pretty rapidly over the past few days, and there are a few reasons why this is happening. Number one, people consider gold to be a safe investment, meaning that the price of gold typically does not fluctuate as much as things in the stock market and even perhaps real estate do. So a lot of people consider investing in gold as a very safe investment that will gradually increase in price over time. Now, this is especially important given the fact that the stock market has pretty much been all over the place this year, obviously with the major crash that we had in March. And since then, it's typically gone up, but we've had a lot of days where there's been heavy correction, particularly recently in the tech-heavy stocks such as Apple, Amazon, and Facebook. So with all of these fluctuations recently in the stock market, again, a lot of people are considering gold to be a much safer investment to protect their wealth, and maybe investing in the stock market at this time for them is a little bit too risky. Another reason I believe that the price of gold has been increasing recently is a little bit of FOMO. So I think a lot of people are seeing that the price has been increasing because of the first reason that I mentioned, and they want to jump in because they see that, oh, this is a great investment, gold is pretty cool, I might as well get in and hold some gold. So I think that fear of missing out on a major increase in the price of gold is driving a lot of people to actually invest either in physical gold or, I think even more popularly, in index funds that track the price of gold. Now, how does this relate to inflation? Because as of right now, we are not in an inflation economy, we are actually in a deflation economy because a lot of people aren't going out and spending money. In order to increase inflation, people have to go out and spend money and essentially circulate that money throughout the society. But with all the restrictions still in place in many states, and actually the increased restrictions that are going on in states such as Texas and California and Florida, people are not spending money the same way as they normally would, obviously. But just remember, the stock market and typically a lot of investors in general are forward looking. So they're not looking at right now, they're looking at, a few months down the road and even perhaps a few years down the road, in that inflation is likely going to increase once we're able to go out and spend money like we normally would before the pandemic. With right now the interest rates being very, very low, basically zero. Obviously, again, we're not in an inflation economy, we're in a deflated economy. But going forward, once we are able to go out and spend that money, interest rates will likely see a major boost up, and that is a major driver of inflation. So these investors that are actually driving themselves into gold are thinking about that point in time, whether, again, it's a few months from now or probably more realistically, a year or two from now. So these investors feel that gold is a much safer investment for their wealth as opposed to investing in the stock market or perhaps real estate when they are pretty sure that inflation is going to kick in within the next probably year or two. Inflation is typically something that will drive the stock market down. And obviously, again, that's not a good thing if you're a heavy investor in the stock market when inflation starts to pick back up. So I'll just back up one step and quickly explain what inflation exactly is and how we get to that point. So inflation is essentially prices that are being increased steadily over time because of the circulation of money in the economy. So why is that going to happen in the future? The reason is because so much money is being pumped into the economy right now by the federal government via stimulus checks, unemployment benefits being higher than normal, and these loans for small businesses. So all of this money being pumped into the economy and not really being able to be spent like it normally would be, most people are holding on to their money and not going and circulating it throughout the economy. So what that means is that right now we're deflated because the economy is not essentially booming in terms of money being circulated. However, once things open back up, people will take that saved money that they've had and they will go and spend it. Theoretically, they will go out and spend that money, circulate money throughout the economy, and that will drive prices back up. And in order to combat this, the federal government typically at that point will raise interest rates in order to reduce the amount of money going around and in order to reduce the loans that people are taking out in order to spend more money. Because if loans are basically 0% interest, most people are going to want to take out a loan, especially if they really need to. However, if the government raises interest rates, a lot of people will be more hesitant to go and take out a loan unless they absolutely need to. So raising interest rates is typically something that the federal government does in order to reduce the rate of inflation. Now, again, as I mentioned before, I see that happening probably within the next 2 years, where inflation will start to go back up once we get an effective vaccine or therapeutics for this virus and states start opening back up and people are able to go out and spend money again. So again, correlating that to the recent rise in gold, I think a lot of people are believing that gold is just going to be a better investment when that time comes. Because investors don't know exactly when that's going to happen, they're planning a little bit ahead and just thinking that I might as well keep my wealth in gold right now, or at least part of it, instead of putting it all into the stock market and essentially believing that it's going to either crash or have a major correction at some point when inflation increases. Now, we've also seen the prices rise not only of gold, but also of other metals such as silver and also cryptocurrency. So that's another commodity that people are gravitating towards in this environment, believing that the US dollar is decreasing in value because of all the money being pumped into the environment and people not being able to spend it. So when they are able to go spend it, the value of the dollar is going to be significantly less than it is now. Now, an example I'll use here is just say you go and buy a loaf of bread. It costs $3 today. Again, in a deflated environment, once we get, say, a year down the road and everything's opened back up and the economy is booming and there's a lot of people spending money, why would stores not be inclined to raise the price of that bread, right? If more people have money to spend, the supermarket is going to raise the price. Now that loaf of bread may cost $4 or $5. And again, that is what causes the gradual inflation of prices, and things tend to just go up over time. So what's my opinion of investing in gold at this time? For me personally, I'm going to put a very, very small percentage of my portfolio into gold. It is at an all-time high right now. So I would not recommend investing a high percentage of your portfolio, if anything, into gold. However, I do feel that it's going to continue to increase over the next at least few months, just because I believe people are going to continue to think along these lines, as I've mentioned in this video, and just want to be in a safer investment for their wealth and not necessarily put all of it in the stock market. Now, that's not to say that I believe the stock market's going to crash or anything like that. I think that we are going to continue to have these ups and downs of the stock market where we will see it, kind of go back up and then have these corrections. And I believe the stock market is probably going to stay about the same for a while now. It may go up slightly. I don't see it pulling back way too much, but I believe that something like gold or cryptocurrency may be a solid investment, at least right now, because I see those prices increasing as the US dollar becomes less valuable. Now, if you're wondering, I believe the best way to invest in gold, if you are going to go that route, is not going and investing in a physical piece of gold, but rather going into the stock market and investing in one of these index funds that tracks the overall price of gold. So some good ones are ticker symbol GLD, and just straight up GOLD is a company that actually mines gold. So if you guys have any questions, please leave it in the comments below. I would love to answer anything that you guys have to say. This is something that has really gotten a lot of attention recently in terms of, investing in gold. So if you guys have any experience, or you know anybody, or if you're personally invested in gold, please let everybody else know in the comments what exactly you did and if you're confident in that investment. And perhaps even the reason why you chose to invest in gold. Again, I mentioned a few things in this video, but I would love to hear what you guys have to say. So please smash that like button, hit the subscribe button as well, and the notification bell so you can see every time that I upload a video. If you guys like personal finance, please check out my other video. I'll link it right up here. That's going to discuss some of the best no annual fee credit cards, and I've got a lot more good material coming soon. Take care, everybody. Bye-bye.